Okay, so imagine this corner of the crypto world that literally never sleeps. It's a 24/7 financial arena where fortunes are made and lost in like the blink of an eye. We're talking about perpetual futures, and believe me, this high-stakes market might be on the verge of a massive shakeup.
And look, this isn't some tiny niche market we're talking about. The global perpetuals market often sees daily trading volumes in the tens of billions of dollars. I mean, that's just a staggering figure. It dwarfs a lot of traditional financial markets, and it's running around the clock, all across the globe. And right at the heart of it all, you've got traders just riding this insane volatility. For them, it is an experience of extremes. The profits can be absolutely life-changing, for sure. But the risk of getting liquidated, of losing everything, that is just as real. It's this constant tightrope walk between total thrill and pure terror. But right into this Wild West, a totally new kind of challenger is stepping into the ring. And this one, it operates by a very, very different set of rules. So that new player is Kalshi. Now, you might know them from their regulated prediction markets, where you can bet on stuff like election outcomes or economic data. A move into crypto perps would be a massive pivot for them, and it basically signals this fascinating collision of two completely different financial worlds. The contrast here is just stark. On one side, you have the current kings of the market, these huge offshore exchanges that operate in a regulatory gray area, famous for offering insane amounts of leverage. And on the other side, you have Kalshi, US-based, federally regulated by the CFTC, and built on a foundation of compliance. This isn't just about a new competitor entering the space. It's a completely different philosophy. We're talking about things like segregated customer funds and trade surveillance, stuff that's pretty much unheard of where things stand now. All right, so before we go any further, let's just hit pause and break down the financial instrument at the absolute center of this story. What exactly are perpetual futures? So, it all starts with a traditional futures contract. This is a really simple concept from classic finance. You and I agree to trade something, let's say Bitcoin, at a set price on a set date in the future. Pretty straightforward, right? But perpetuals, they add a crucial twist. They take that basic idea and they just get rid of the expiration date. And that is the key innovation here. As a trader, you can hold your bet, your long or short position, for as long as you want. Whether it's for 10 seconds or 10 months, it doesn't matter. That flexibility is exactly what makes them so incredibly popular in crypto. In practice, it's actually pretty simple. You pick an asset, like Bitcoin. You decide if you think the price is going up, that's going long, or if you think it's going down, which is shorting. You hold that position, and then to keep the contract price tied to the actual market price, there's this little mechanism called a funding rate. It's just a small fee that gets exchanged between the longs and shorts every few hours to make sure the market stays balanced. And that's pretty much it. So the big question is, why would Kalshi make this move right now? Well, the timing here is absolutely critical, and it has everything to do with the chaos that has basically defined the crypto market for the last couple of years. I mean, the market has just been rocked by these massive collapses, right? You had Terra/Luna, and then, of course, the bankruptcy of FTX, which was once a giant in this exact space. These events completely shattered trust and triggered this huge wave of regulatory scrutiny all around the world, creating a massive vacuum for a trusted operator to step in. So, in the wake of all that chaos, there's now this clear demand for safer, more transparent alternatives. And this is Kalshi's opening. By leveraging its regulated status, it can position itself as a kind of safe harbor, a trusted place for traders and institutions who are just tired of the crazy risks that come with these unregulated offshore platforms. So, what happens if a fully regulated player actually succeeds in this space? The potential ripple effects could be enormous. We could be talking about changing the entire structure of the crypto derivatives market as we know it. Well, first, it would mean direct competition for the giants like Binance and Bybit. And it could potentially start siphoning off their more risk-averse customers. It could also create a blueprint for how to regulate these products in the US, which is something regulators have been struggling with for a while. We might even see some fascinating new hybrid products that blend event prediction with crypto trading. But of course, this is a huge gamble for Kalshi too. It exposes them to new risks in a super volatile market. And for traders, it might mean lower leverage and fewer assets to trade compared to the offshore exchanges. A real trade-off between safety and that degen-style opportunity.
But ultimately, what does all of this mean for the everyday trader? How does this shift from the Wild West toward a more structured environment actually impact them? For a retail trader who has felt that fear of liquidation, who's worried about the fairness of the platforms they're using, this is a huge deal. A regulated venue promises a level of transparency and oversight that has just been sorely missing from this space. It's not just about trading. It's about trading with the confidence that the game isn't rigged against you. And that really brings us to the big question, doesn't it? We've seen spot ETFs bring crypto into traditional portfolios, which was a monumental step. So is a regulated US-based derivatives market the next and maybe even the final piece of the puzzle in crypto's long journey toward mainstream financial acceptance? It's a bold bet, and you can be sure the entire industry will be watching.